Okay, Aya, welcome to the podcast. Glad to have you on. How you doing?
I'm good. How are you?
Very good, very good. So before we dive into, I'm sure, tons of stuff that we want to get into and talk about with Falcon X and whatever that ends up leading to. Tell me a little bit about yourself, your background. What's your story to give my audience a little bit of an idea of who you are?
Sure. Yeah, absolutely. So, career-wise, I started my career off in banking and capital markets as a consultant in Washington, D.C. Before making a jump to the first startup I worked for called Tigis, which focused on buy-side equity research and outsourcing that for hedge funds. So I
Mhm.
was able to scale that team both in SF and Chicago, and always had this itch with crypto. I'd been watching the space since 2017 and had an opportunity come up to join Pantera Capital, which is the oldest and largest cryptocurrency hedge fund in the US. I
Mhm.
worked on the venture side of the business with Dan Moorhead, as well as Paul Varadatakit, and the then president, Bill Healy. And we had made an investment into Tagomi, and that's how I got acquainted with FalconX through due diligence. Loved the team, loved the product, had an itch to go from these kind of large feedback cycles that you get at venture funds to more of building on the startup side. And so made the jump now 2 years ago and have built out our institutional coverage desk at FalconX as well. So it's been, I would say, explosive growth. And it's a lot of fun, definitely exhausting.
Yeah, it sounds like explosive growth for you personally. Just
Yeah.
constantly jump to the next thing. Are you so okay? Your background, is it mostly in finance?
Yeah, primarily.
Okay, very cool, very cool. So okay, let's talk about Falcon X a little bit. Um, I don't know too much about it. I did a little bit of research, looked at the website, looked at whatever was out there, and some of it still kind of went over my head, other than the whole exchange part. So tell me a little bit about what Falcon X is, and what the whole mission is. What's the goal?
Yeah, absolutely. So FalconX, what we built is an all-in-one service, full service for institutions to trade, borrow, lend, store, custody, and clear cryptocurrency.
Hmm.
And so, as an institution, if you think about, years ago, the way you would access uh, the ability to purchase crypto would be, as you mentioned, through exchanges. And so these centralized bodies and the pricing and just the uptime on those exchanges depended fully on the order book and the amount of liquidity that they had on both sides, on the buy and sell side of the trade. And so as the industry has expanded, our value add proposition to the space has been, as a principal dealer, we sit on top of 15 or so different liquidity providers. And that ranges from unstructured liquidity like OTC desks and dark pools and prop shops and miner flow, as well as lit liquidity pools, which are your traditional exchanges. And
Hmm.
we are able to aggregate that. So at any given point in time, we'll give you the best buy and the best sell price on the assets that we service. And so that was really our product to market, and since then have really expanded up the vertical of being that full suite service provider.
Very cool. Very cool. So your clients, your institutional clients, are they like banks, hedge funds, or exchanges, or what are your primary client base?
Yeah, that's a good question. So it's actually changed a lot over the last year, and I think that's a great reflection of the space as well. And
Hmm.
so a year ago, I would say it was primarily these crypto native funds. And so think of like venture funds that would come into the space and then have to trade in and out of positions. You had systematic hedge funds. You had these crypto native algo traders. And slowly what we were seeing was that those volumes started diversify away from crypto native as more and more traditional folks started coming in. And so you were seeing family offices, let's say, that wanted to allocate some of their capital into token holdings. You were seeing even some traditional finance hedge funds who started opening up a crypto arm that was trading cryptocurrency. And then more recently, which has been super exciting for us, it's been these small and medium-sized businesses. So one unique case that we saw, and I'm super excited about this because it does really lead to the narrative of diversification of flow and maturation of the space, is family offices. And primarily, this one unique case was a small, medium-sized business, which was a senior care home. And so super unique, not necessarily a client persona that I always think of as an institution. So that's on one side. And then now our second largest persona has become these retail aggregators. So wallets, lenders, the PayPal, SoFis, Cash Apps of the world, who are really looking to source liquidity that has almost 100% uptime and is able to provide them really good pricing and just great technology integration. So I would say that at large kind of covers the full scope of the clients we service today.
Very cool. I imagine you've had like a huge influx of interest too.
Yeah, so pretty awesome news for us, but we now have over $3 billion in trading volume a month. And the crazy thing about that is we don't have a sales team. So we have no external sales. It's all been organic. And I think more power to the team. And it speaks to just our ability to prioritize customer service, where a lot of these clients will tell their clients about us, and through the grapevine, we've managed to expand as much as we have today.
You say 3 billion in trade volume monthly?
Yes. So we'll be somewhere between 20 to 25% of Coinbase's monthly volume.
That's pretty good considering that you're not necessarily like a public exchange, and you're bringing on institutional clients, do it privately and over the counter. So it makes more sense.
Yeah, like I said, it's been a ride.
Oh, I bet. You mentioned SMEs too. Like when you say SMEs, are you talking like brick and mortar stores and mom and pop shops and Game Stops and things like that? Or
So maybe not GameStop, but I definitely think we haven't reached at least for us necessarily the mom and pops just yet, but we have seen the brick and mortar, and so that to me is both inspiring on one side, that it's a leap of faith that these institutions, in my mind, are taking into crypto, and as someone who's been in this industry now for 3 years, pretty great to see the table kind of turn. But on the other side, it also, I think with bringing on this new asset class, these new institutions and asset allocators comes, having the responsibility of education and making sure that everyone knows the risks and the volatility that comes with a young market like this, and obviously the prioritization of security.
right. Yeah. Incredibly volatile market. Jeez. But what are they like looking to trade? Or is it mostly just them putting money into like Bitcoin or in Ethereum, or are they speculating a bit more?
Yeah, good question. So we've seen primarily Bitcoin and Ethereum. I would say it ranges top 5, top 10 coins. So I would say take the top 10 in market cap on Coinbase.
Okay. Gotcha. That makes sense. What companies have you raised funds from? Because I know that you guys have got quite a bit of backing as well, right?
Yeah, so we've been really fortunate to have partnered with a wide scope of investors, and I think a large part of our success is due to the advice and guidance we've gotten from them. So almost in the same way that our client persona has changed over time, from crypto native to more traditional, so has our cap table in the additional asset allocators that we've included, and that went from, I would say, more crypto native. Our largest investor is Axel, and they have been really at the forefront of helping guide us through the ecosystem, which I would say is more of a traditional even investor. coupled with a lot of crypto finance folks. And then we've expanded to, the more recent investment announcement that was made with American Express. We also have folks like Fidelity, Lightspeed. And so I think all in all, it's, has been really great to lean on some of these investors for guidance as we look to, expand our product suite into additional financial tools.
When you say you're going to expand your product suite, like what tools are you talking about specifically?
Yeah, so great question. When we came to market, we initially had, I would say, these 3 different ways that someone could trade with us. So that included, let's say, over the chat. So what we call OTC. So you have primarily either a Telegram chat or a Skype chat, and where on Wall Street, you would just call your broker and you would execute a trade. Here, it was more along the lines of you ping a trader in the chat and you ask for a specific price. And the engagement that you get in the chat is very white glove. Primarily, sometimes you're looking for like a TWAP, or you're looking for a more specific structured product, and you're looking for maybe an illiquid token, depending on your jurisdiction, to trade, or you're looking for a really large size. If someone comes with a 10 million lot size, and wants help breaking that up and getting the best price for that. So typically you would go through chat, and I would say that's kind of like the bare bones of what you can provide on the trading side. We moved into then the GUI. So this is self-execution platform. It's very similar to, let's say, if you were on Robinhood and you go on your phone and you trade, you don't have to interact with a human or a brokerage, and you see the prices, you can see your balances, and you can settle. And so we started with those 2, and then we expanded into our APIs. And so you have this connectivity. These are for systematic traders. You can set different order types on it and trade, run prices, stream prices all day. And from that, we expanded from our trading suite into, what we're hoping to expand more order types. And so let's say across these different platforms, whether it's limit or TWAP or VWAP, and then on top of that, we built a credit facility. And so, our margin product is now as sticky as our trading product and couples really well as a delayed settlement product for our clients to use after they're trading. And so you have those 2 things. On the custody side, we've partnered with some custodians that we're super excited about and have a very similar mission as FalconX, and so the integration works well. And then looking to expand beyond that, which is primarily clearing and settling. Personally, I think the largest pain point of the industry is the ability to cross margin and trade across multiple platforms, and the ability for trade operations to happen in a very fast way so people can turn over their book quickly and seamlessly.
Have you guys had like any clearing issues, with, I imagine, clients using large transaction volumes and stuff like that, moving money around? Do you guys ever really run into clearing issues like that? Or do you have like a good bank, or like what's your strategy in that regard?
Yeah, good question. So we use, there's a lot of networks out there that I think have really helped simplify the problem. It's not a solution that fits everyone. And there's definitely unique instances in which it doesn't. But, one, I would say a few of them are, you have the Signet network, the Silvergate Send network, and you also have folks like Fireblocks. And in these instances, what these companies have done is say, hey, we have access to your bank account. We can see that there are assets in this account, and we see that there are assets on this other account. And so we'll transfer the money within all of the accounts that are on that network. Now, what happens in the use cases you mentioned is, let's say someone's outside of that network. In that case, you're fully depending on, let's say, the Bitcoin blockchain to execute the transactions. And it's fine, I would say, like on a Sunday at 2 p.m. when perhaps not as many people are trading. But, for example, this morning when Elon Musk changes his Twitter handle and includes Bitcoin, suddenly, everyone's trying to buy Bitcoin and the blockchain becomes very crowded and it takes a lot of time. And in those instances, I would say, this goes back to the point of education. You have to teach someone, how much gas should I pay to speed this transaction up? And, sometimes that gas price is just exorbitant. And so I think in those instances, for like let's say $1 billion asset manager to come into the space and want to allocate, large portions of capital, that becomes a little bit of a roadblock, and also introduces, having folks like FalconX and others out there who can help kind of mitigate that a little bit.
Yeah, like if transaction volume picks up for like Bitcoin or Ethereum, do you have like your clients coming to you and be like, yeah, it's too expensive, it's slowing down, I can't clear a transaction? Like, do you guys run into those problems too? Or do you guys have a workaround for that as well?
No, we do. And anyone who tells you that that's been solved is not being truthful. It's a huge issue. And I think, what's interesting is that even in traditional finance, when you think about what's some of the largest costs of these funds, it's back office, it's trade operations, and it's settlement. And it hasn't been solved on the traditional finance side yet either. If you think about it, clearing in the traditional world takes 2 business days. And so we're trying to make that really fast on the crypto side. But even then, it doesn't happen in minutes all the time. Sometimes it'll take upwards of 30 minutes. And if you're an algo trader, you're a systematic trader, and you're trying to, run an exchange arbitrage strategy, that can really impact your flow. And so we're definitely seeing some issues come up with it, and it's interesting because the infrastructure is being stress tested right now, as you mentioned, trading volumes increase.
Yeah, I think Coinbase was down today on trade volumes being up as well for Bitcoin and a number of others, and Dogecoin. I don't think they have Dogecoin, but I think, yeah, there's been a huge influx last day or so. Yeah, I think Coinbase was down. I think, was it Bittrex or another one was down too? But yeah, they're definitely being stress tested like to the max at this point. So I think that'll be very eye-opening for people though too, like being able to see that, these are probably good investments, but that there are some issues slowing them down. Is Ethereum the best platform? Do you want to build an institutional grade product on it versus something else that's faster, that offers a bit more, like Polkadot or Cardano potentially? Or is Bitcoin the best asset to hold? Should you hold Litecoin or something else that might, clear or transact faster? So yeah, definitely with you on that. It's definitely a problem, but I'm sure you deal with it enough.
Yeah. Then you just brought up like a million great points. And I think like the one I want to hone in on too is when you think about, I think we kind of expect so much from crypto, and we fail to understand that these are very similar problems we're currently seeing in traditional finance. So if you think about even, whether or not it's accurate, but what the liquidity issues that Robinhood has sometimes, and then them going down for those liquidity issues. Similarly, any centralized exchange, because of just the nature of having to have market makers and supply on both sides, if that supply doesn't exist, you just can't trade it. And I think we're in a world right now where we kind of don't understand that sometimes the supply just isn't there. There's a supply crunch. And I think it could be really interesting for decentralized finance and DEXs, where they do aggregate from all these multiple sources, and where, if there isn't that liquidity, it's much more transparent, and will be interesting, I think, for us and anyone in this space to see, as you mentioned, a few of some other blockchains too, what the movement will be perhaps outside of Bitcoin, Ethereum, and centralized exchanges.
Yeah, it's very interesting times, isn't it? It's very fun to watch this stuff.
Yep.
What would you say? What would you say, like, top 5 your clients like to invest in the most, or did they speculate or trade on the most? Obviously, probably Bitcoin and Ethereum are in there.
Yeah, so I would say on the retail side, it's going to be Bitcoin, Ethereum, Litecoin, Bitcoin Cash, and then before XRP was delisted, Ripple. And then on the I would say more institutional side, it will primarily be Bitcoin and Ethereum. We're seeing a lot of stable coins. And so that's really interesting. On the Asia side, primarily Tether. On the US side, primarily Circle's USDC. And then dependent on specific jurisdictions, we're also seeing some interesting names in decentralized finance. So, a DEX, for example, is Uniswap. And there's other projects that we've seen gain a lot of traction. For example, the DeFi blue chips. So kind of the leaders of these different decentralized platforms, whether it's Wi-Fi, whether it's SNX, Synthetics, whether it's Aave for lending and Compound or Balancer. So I think, those have definitely, despite some of the ups and downs of the volatility spectrum, we've seen, them still peak a lot of interest. Most of them are at all-time highs. And I think, if I'm not mistaken, we had Grayscale just announce that they'll potentially come out with a trust for some of these decentralized platforms. So I think it was Aave, and I think Polkadot was also another one of them. And Polkadot has hit all-time highs as well. So it'll be really cool to see. I think, even just taking a step back, it takes a lot of time to build these products and the underlying infrastructure, and we're getting to a point where some of these products are coming to market. And so to your point about Polkadot, the DOT ecosystem going live is going to be really cool and influential to the space, just because of all the projects that are currently building on top of it. So there's still so much more to come. We haven't even scraped the tip of the iceberg.
Oh yeah, absolutely. Do you have any concerns with allowing them to trade stablecoin like Tether, that has a lot of questions, that isn't necessarily backed by a whole lot, or if anything that we know of, versus something like USDC or what Circle's got? 'Cause there's a bunch of stable coins out there at this point. But do you have any concerns allowing them to trade like Tether versus something that has a little bit more validity?
Yeah, absolutely. So, I think there was a lot of speculation on how much one-to-one, as you mentioned, the Tether stablecoin was backed by, and I think there was a lot of it was definitely speculation. At least from our side, as we heard, there's definitely counterparty risk, whether it's Tether and whether it's Circle. I think, that's something to keep in mind. There's nothing that has zero counterparty risk. Even the US dollar, if you were to boil it down, has some level of inflationary and counterparty risk with the Fed. And so, the counterparty risk definitely exists. I think, to your point, when the questions around Tether came up, we were seeing a bit of some, selling action. And there was definitely a little bit of hesitation from Asia markets, who again use Tether very actively as a stable coin. But since then, volumes are back up. And so it does seem as though, this speculation may have passed and we've kind of moved on to GameStop.
I think it's a temporary period with the whole Wall Street bets, GameStop, and hedge funds thing. I think that'll pass. Yeah, I think the biggest thing that is highlighted is the centralization and the manipulation and control on society that you don't see every day until it's really highlighted. So I think that's just kind of at the forefront right now. But it's all kind of circling back to crypto and stuff, and which is good, because that's kind of what you want people to do, right? You want people to think about what the better solutions are and how to fix the problems in society and not be so complacent. So hopefully, Tether is something, going back to that, kind of worries me a little bit, because of the fact that it's really not one-to-one backed with, well, it is technically one-to-one backed with the dollar, but there's nothing really behind it. And then we can talk all day about the woes of the US dollar anyway. So hopefully something better comes out of stablecoins soon.
Yeah, and I think, listen, I think there's always going to be some level of speculation around, how to prove that the one-to-one exists, and where's the dollar being stored, and is the dollar being stored in a secured way? Is it cold storage? Things like that. and I'm sure those questions come up with USDC as well. I think, to that point, it'll be really interesting if we do see CBDCs, these government-backed digital currencies, if those come out, because in a way, that might alleviate some of the, I would say, concerns that people have with some of the speculation around stablecoins. However, we haven't seen, I would say, at least from the FalconX side, we haven't seen too much concern just yet on the stablecoin side. I think people recognize that there is some level of counterparty risk engaging in cryptocurrency, and so where do you start if you peel back the layers?
True. I think for most people, it's, that onboarding process when you're getting from dollars to crypto, and then you have what's in the middle, and Tether's usually the first thing they go to. That's the only reason why it's so concerning to me. I know it's concerning to a lot of people. But like, one-to-one with the dollar is one way to go. I mean, in your professional opinion, do you think it'd be better to back it to maybe like a basket of assets, or to a hard asset or something like that? Or to just kind of reinvent it? Because I feel like backing it one-to-one with any fiat currency is a little risky.
Yeah, that's a good question. So my personal opinion is just, if you look back at the history of money, and the evolution that money had as being a gold-backed currency, and then the fact that gold backing was broken, and then currencies were then backed by the US dollar. I think, either way, if you're concerned with inflation, then you're not going to be touching a stable coin, because it's still backed by the US or whatever dollar. If you even taking like a step back, what's the goal of you trying to get into the cryptocurrency space? If it is to purchase, certain types of assets, let's say like crypto using stable coins, then the end goal is Bitcoin and Ethereum, and you can do so by just finding a fiat on and off ramp and not touching the stable coin. If the idea is using the stable coin to, let's say, as a payments rail to move money around, you could probably find other assets that you might feel more comfortable with. There is going to be just the risk of volatility. And so if you think about, why are people using stablecoins to start, and then where does the hesitation come from? I would say typically people who, there's like Binance USD, for example, there's Paxos as well. There's True USD. There are other options where if, the goal is to move money around, and you are very concerned with the counterparty risk with some of these stable coins, those options exist. But also, I would say, typically, if you're also looking to just make payment transactions across different borders or worldwide, crypto inherently helps you do that. And so you can just lock in a price of Bitcoin at that time and make a conversion as well. And so I think, to that point, it's really just taking a step back and understanding, like, the history of money is that asset-backed currencies have not worked historically in the past. And at some point, the one-to-one ratio gets broken because it's not enforced in a way that you can prove that the asset exists. Even if we were to back, I don't know, $1 with, let's say, a bunch of apples, the apples rot, and at some point, you can't prove that all the apples exist. And so it kind of, if you think about just the key components of money, I think Bitcoin has proven itself, and some other currencies, just to be unhackable, traceable, like the authenticity is there. It's divisible. You can use pieces of a Bitcoin to purchase and send, and other options may not exist that way. But going back to your point around stable coins, I think it really just depends. What's the end solution that you're hoping to get? If it's just to sit on stable coins as opposed to the underlying currency, you're probably, to your point, better off just holding the US dollar.
Right, right. I mean, I wouldn't back anything to apples either. That doesn't sound like a very good strategy, but those apples will go bad quickly.
Right.
Exactly. Would you consider yourself a Bitcoiner? Like, do you think that Bitcoin is the new digital gold, or do you have a little bit more of a moderate view on it, or what's your stance? Because I know that's pretty varied nowadays. Like everyone's like one side or the other, and then if you do sit in the middle, then it's kind of an awkward position.
I guess I'm in that awkward position. So I've always considered gold, Bitcoin to be digital gold. In my view, I've never really, in the same way that you don't go to the store and make your purchases with gold, I wouldn't imagine that I would ever be buying my Starbucks coffee with Bitcoin. Primarily, one, because the volatility is just insane, and it is a store of value. In my mind, in the same way that I purchase ETFs or stocks, it's because I'm using that as a store of value, because I think that value will increase over time, and therefore, for purposes such as 401k, an investment, retirement, or purchasing of a house, would like to increase my net worth. And so I think that's how people kind of look at it. And so if you focus at just the end goal, which is I'm just looking for a store of value that will increase in price, and I'm, the counterparty risk I'm comfortable with, then I think Bitcoin's a great option. It's been stress tested now for over 10 years. It hasn't been hacked. And I think the underlying technology has proven itself to be, pretty sustainable for people to get in. And that's why you're seeing these large institutions like MicroStrategy, like Square, making large treasury plays in this space. However, I do think, to your earlier point, there needs to be a blockchain that also helps with purchases and transactions, and that, in my mind, is definitely Ethereum. I think I'm very excited to see some of the competing blockchains that are coming out. So, as you mentioned, Polkadot, Cardano, there's Solana, there's Near, and it'll be interesting to see, primarily the biggest issue, which is price and speed. So can transactions happen in a faster way where, if Ethereum gets clogged, what do you do then? And your transactions don't go through, and cost. So what's crazy in my mind is that, let's say you pay for a transaction to happen. If the Ethereum network is clogged and your transaction doesn't go through, your gas fee does not get returned to you. And so, in those ways, I think right now that's definitely an obstacle for, larger adoption. And we've seen that as far back as CryptoKitties. And so
Right.
it's been a notable problem for a while.
Yeah, one of the things I always have highlighted is, why would a big company or institution, let's take Microsoft, for example, want to build an application on Ethereum if, a couple of days later, there's a spike in CryptoKitties that's clogging the platform and now you can't use their app, right? So I guess there is a huge question. It's a good point you bring up on, being able to do payments on a daily basis. And transact, because it's not that great with Bitcoin if you're trying to do it in volume, and especially in small amounts, because the fees go up, it slows down, so not always practical. And I guess for a while, I mean, the solution for Bitcoin has been like Lightning Network and stuff like that, which is really interesting. And then comparing that to what you can build and it's happening in terms of like DeFi and stuff on top of Ethereum, and then there's other platforms that are coming up, with Polkadot, Cardano, and others out there with solutions too. So I think it's just a good point you mentioned, because it's like we forget sometimes we also want to use crypto like daily, in terms of like being able to pay for our Starbucks coffee or go to the mall or buy a meal. But it may not work that simply in the future.
Yeah, well, first off, I'm hodling, so I'm definitely not spending my my Bitcoin on Starbucks coffee. But I agree with you wholeheartedly. I really do think, you bring up a good point, and that's why you've seen in the past some of these organizations like Microsoft, like Walmart, for example, try to build their own blockchain, which I also don't think is the solution. I think, to your point, one thing as an industry, I think most people know, but for newcomers is that to build great tech, it takes time. And so, with that being said, Visa and Amex being able to transact thousands of transactions per second around the world on all of their payment providers didn't happen overnight. And it took a lot of time, tech, and really great talent to build that. And so, I think in 10 years, we've done a lot, but we're definitely not we're not done. That's for sure.
Yeah, yeah. You've had your finger on the pulse of, this industry and for quite a while, I guess, and definitely under FalconX. What's your opinion and thoughts on like the current market? Like it feels like so much of finance is coming out of, traditional finance and flowing into crypto in different ways and into decentralized finance. Do you see that like starting to happen, with all these institutions showing interest in wanting to be in the space and all the money flowing and then the public interest? Or do you think that is, still pretty constant and has been happening for a while?
Yeah, that's a good question. It's definitely increased, and it's I would say what's different from the ICO boom of 2017 2018 was that was primarily retail driven. And so what we're seeing now is that this wave was really primarily institutional driven. And so as you mentioned, it started off with the micro strategy, you went into Square, we had large hedge funds enter the space using Bitcoin futures. We're having, BlackRock, who has been approved potentially to trade Bitcoin futures in 2 of their funds. These are massive asset allocators. And I think, having that stamp of approval of this is a store of value that, these massive allocators and their compliance teams feel comfortable with is really helping the next retail wave. I think what you mentioned is really spot on. It's, with COVID and everything that's been exacerbated by it, the stimulus checks, people sitting at home, the Robinhood traders, that has really drawn a lot of attention to almost what I consider like a new wave of wealth, where you do have, a persona of retail that is getting investment advice from TikTok videos, from Instagram videos, these, and, something we would laugh at, but it's, there really is, these there are 18-year-olds on Robinhood that are trading options and they don't have Charles Schwab brokerage accounts and they don't have, a Schwab's broker that's giving them advice on what to trade. And so, perhaps the size of that capital is much smaller, but as we've seen with GameStop and AMC, it could become, when coupled together, pretty large. And so I think, it's a really interesting wave, what we're seeing right now. And I hope that it'll lead to, potentially more regulation that's supportive of retail and protective of retail trading, and also help just create more accessibility. The whole, point of crypto is to democratize finance. And I feel like this week, at least leading up to Robinhood shutting down, you were really seeing the power in the retail trader and what that might mean. And we've definitely seen it in crypto starting a little bit as well.
Yeah, the powers that be are definitely going crazy this week. It's been insane. You know what FalconX needs to do? You guys need to get a TikTok.
A TikTok.
Yes.
All right,
Yes.
I'll bring you on to run it.
Yeah, that'd be interesting. Okay, yeah. Few more questions before we wrap up. I'm kind of curious about COVID. Did you guys have any setbacks with that? Did that slow you guys down, or were you able to kind of skirt some of that in 2020 with, being able to grow as a company because you guys can probably, work at home like you are right now and kind of avoid some of those pitfalls that other brick and mortar companies have had?
Yeah, that's a good question. I would say, COVID has definitely hit the company in terms of the overall culture, and we did have employees get sick and family members, and from that perspective, it was difficult, as I'm sure it was for anyone around the world, not even just secluded to the US. We have a team in India, and so I would say working in health conditions have been just drastically different across the board, and something that we've been super mindful of, just protecting employees wherever they might sit. And so, I think that definitely had its an impact. As it relates to crypto, though, I would say, the ultimate need was so exacerbated by COVID. As I mentioned, with the stimulus checks, what we saw was that a lot of people weren't getting the checks because they were shipped by mail. Sometimes the mailing address was incorrect, the name was incorrect, so they couldn't process it. And even then, there is sometimes a fee or need of accessibility to a bank, an ATM, to process that check. And so there was a large group of people who weren't able to access the first stimulus check. And, there are talks of a second one coming out, and I don't see much has changed. And so, to that degree, with crypto, as long as you pass KYC AML, you need just an iPhone or some cellular device to access these markets, because the wallets are stored on your phone, and the trading is accessible through your phone. And I think, again, going back to the argument of democratization of finance, there were definitely a larger influx of individuals, some of these small brick and mortars, that saw the value in having access to this market in comparison to, maybe what they would have diversified their balance sheet with instead. So, for example, gold, which has remained roughly flat. And so I would say, even what we've seen this week has definitely been exacerbated by COVID, primarily because, people are sitting at home. A lot of things are closed. And so we're asking ourselves really difficult questions in terms of, hey, like maybe before, when Robinhood had shut down, that was fine, but there's more eyes online. There's more attention to what's happening. And, perhaps this might actually lead to change that will benefit, a larger majority of the people who are using these platforms. So I think it's been almost a year, if not a year, I think, for the US, since, the country and portions of the country shut down. And, we've gained a lot of knowledge since.
Yeah, I think we've learned a lot, especially that $600 is not enough. Like I didn't know what to do with that. Like I got it like in my bank account a couple of days later. Once it started rolling out, I just put it in Bitcoin. Like, what am I going to do with $600? It's not going to pay my rent. It's not going to.
You must have made a killing if you kept it in Bitcoin, because the price has rallied so much since March.
Yeah. Well, since I put the $600 and I got it like a week ago, so I guess it's gone up a little bit. But I mean, it's not like a significant amount of Bitcoin. So I saw a statistic on the first like $1,200 stimulus checks that came out last year. If you would have put that in Bitcoin at the time, and then you would have sold it like at the end of the year, you would have been up like, I don't know, it'd be like $15,000, something like that.
300%. Yeah.
Crazy.
Yeah.
Yeah. I imagine 100%. They're all buying Bitcoin now.
Yeah, we'll see. I mean, again, we'll see what that second stimulus check, if it makes its way out of Congress, what it'll look like in terms of, in practice on Robinhood and on these exchanges like Coinbase.
Yeah, well, they're too busy bailing out the hedge funds. I don't get it. Just give them $600 and they'll be fine, right? So it's such a sore topic. Anyways, what's your guys' roadmap look like for 2021? Like, how do you guys plan to grow? I know you mentioned earlier you got other products and stuff you're working on pushing out, but like specifically for like this year, what are you guys focusing on the most?
Yeah, great question. So it's going to be growing the team. I think what is just a testament to the people that work at FalconX, if you look at just our volumes and how much we've been able to produce and accomplish in the last 2 years, and then compare it to some of our competitors who have very similar volumes, our team of 35 is easily 10 to 50x smaller than the closest competitor, and we're very lean. And so I think, one of the really exciting pieces for us to do now is really turn on that growth mechanism and expand the team and use everything we've learned about being lean and being profitable to now just expanding that across geographies and across the products I'd mentioned earlier. So we're definitely set up for success to do that.
Awesome. Well, very excited for Falcon X. It sounds like you guys are doing some cool stuff, and it's a lovely conversation too. Had a good time. We got into a lot of topics. Yeah, Aya Kantorovich, is that how you say your last name?
You nailed it.
Kantorovich, awesome. Well, yeah, thanks for coming on the podcast. We really appreciate it and taking the time to, dive into Falcon X and all these other awesome topics on, stable coins and payment methods and all kinds of stuff. All the institutional companies coming on board, what's going on with the market, all the crazy stuff, Wall Street bets. Yeah, we covered everything, right? I think so.
I think so too. Thank you so much for having me. This was really, really a blast, and I appreciate you taking the time, Brandon. Thank you.
Of course. Anytime. Just let me know if you guys want to come back on in the future. Happy to have you. Stay healthy and stay safe.
You as well. Take care.
Take care.